Well, Jason, let me ask you the same thing from a financial planner's perspective. When you're gathering documents and you begin to review the property casualty insurance, what's your biggest aha? What do you see that people are missing?
Yeah, I think for me, when you start asking someone for their insurance policies and declaration pages, and the question comes up, well, when's the last time you looked at your coverage? When's the last time you assessed whether or not your coverage was adequate, or whether or not you were getting maybe the best deal on your premium or something like that? And oftentimes it's, well, I can't remember the last time we looked at that, or looked at it 5 years ago and nothing was close, so haven't looked at it since. And we were talking offline about that.
Yeah, that's very interesting. So I just had a client who's been with a captive insurance agent for probably the last 15 years.
Explain captive. Don't use things that are.
Well, I don't want to get us in trouble,
well,
but
it's somebody that sells insurance for a specific company, and that's all they can do.
That's all they can do.
Yeah.
It's like for me as a broker, I've got 7 to really 10 different carriers, but typically I use about 7 for the most part in this market, where I get to shop for you, take it out to the market and see what's going on and try to get you the best rate. But if you're with that captive, let's say for the last 15 years, typically they're going to add 3% of value onto your home every single year. Now, I don't think the housing market increases that way. I mean, it has this year, but for the most part, in 5 to 10 years, your house is already overvalued. So I had someone come in the other day, and they've been with this company for 15 years. Their house was valued or insured at $800,000. It's a $550,000 home. So they're paying, like almost $350,000 more.
They're insuring a $350,000 asset that doesn't exist.
Doesn't exist, and
It'd
so
be like somebody driving a BMW or driving a little Volkswagen, and they got the insurance on a BMW.
Exactly.
Right.
Yeah. But so what's great about being a broker and having someone like myself is I review it every single year. A captive agent is not going to review it every year, because most often you should expect your insurance premiums to go up to about 3 to 7% a year. They don't want to call you and say, hey, guess what? You're going up 10% this year, because you're going to start shopping. So they just won't call you. My job, and I have the luxury to say, yes, your insurance is going up 10% this year, but this company over here is actually going to save you a few $100s a year with the same coverage. So.
Starting your route to retirement.